What is good, gang? Ben here, and today we're going to be doing a quarterly review. Now, this is something I like to do for all high time frame closes. I do them every week for my own study as homework, but weekly, monthly, quarterly, I'll break down the delivery and study it because all price is fractal. So, studying higher time frame delivery and fractally executing on lower time frame delivery will help you. So here we have the quarterly price action for $1. Now, initially looking at this chart, you don't get too much information. Look at the relative open to close price. Small range, only 90 pips. So not a whole lot of movement for $1. But going through, learning to identify Power 3 concepts in real time. We accumulated to start the quarter above opening price, especially and more so yearly opening price, monthly opening price, and then distributed accumulated shorts here until the following month. Now, I'm not going to go through price action outside of this, but we'd be looking to the left to see what this accumulated above, and then price did accumulation, manipulation, distribution. Easy here. I believe this was a monthly fair value gap that it dropped into here. From there, we had our short-term shift in market structure, fair value gap, displacement, trades back into it, and then we offset longs accumulated below these lows above this high, and then we started our SAR model. As far as the 4 hour goes, intra-month, there's not a whole lot to pull from January for the $1 accumulation of shorts above monthly opening price, displaced lower, and then really just traded sideways. We did have this displacement fair value gap, but it really just was chop, and this is just orders being accumulated, and we see that in a more accurate model here. Drops below this long accumulation, displaces higher again, runs into this breaker here, right here, and then we have our continued distribution of longs. Same thing, range, stop hunt here above previous month high, accumulate short positions above this high and above an old existing high, displacement to the bottom, downside, meets quarterly opening price, trades back into premium fair value gap of this newly created range, and then we displace lower, and now we're accumulating again. So that's $1. I recommend everyone go do the same process, annotate it, and mark what stands out to you. I'm leaving the chart relatively naked, so you guys can go do this by yourself. Top into S&P. Now, to open the quarter, we don't run out any lows. This should be down here. Wait, no, I had it right. We don't run out any lows Here's our first daily low. We don't take these lows or this low. So we don't accumulate any longs as of this. Displacement higher, above an old high. Fair value gap, order block created. Trades back down into it again, and then moves higher into our new month. New month takes out previous month high right here. This is the start of the month. This candle takes out previous month high, accumulates above previous month high. This place is lower. We're leaving a fair value gap in a newly created range here to here. Premium, fair value gap, candle bodies showing up for work. Close below existing. Fair value gap, creating a new one, trades back down into it. And now getting back into what I was mentioning earlier, we didn't take out any sell side to open up this quarter. So price came down and accumulated below the existing quarterly low, as well as taking out these relatively equal lows. From there, tight and sloppy, but accumulated longs. Look to offset them up here. Very, very clear draw. We could come back down, reject from some price in here to come back down into this range. We're displacing. This is going to be balanced. So from here to here, this price leg, slow chop in here. This was inefficient, closed above it. So now we can expect some shallow retracements. This fair value gap, this wick, this, which will be inverted, all stacking up around 40-60 to make some sort of potential monthly scenario for the highs. NASDAQ. NASDAQ has been the leader recently. Oh, my apologies. I actually forgot to do the 4-hour for each individual month, even though this was pretty clear. Again, I said we didn't take any sell side. On the daily chart, displaced higher away from a balanced price range. Fair value gap created, trades into it, reclaims it here. Displacement, sell side taken out here. So that makes this your new dealing range. Discount, retracement, impulse, order block, gone. Like I said, price accumulated above previous month high. Sloppy delivery, balanced price range. Closed lower, imbalance created, trades back into it. And we distribute price lower until coming below old liquidity, accumulating here, and then ripping higher. NASDAQ. So unlike ES, NASDAQ did take out liquidity from previous quarter right here. Very shallow run, but it still took out this liquidity. Displaced higher, trades back down into your fair value gap, and so on and so forth. Displacement, fair value gap, return, impulse. Accumulation off an old order block here. Accumulation below previous month high. Price displaces lower. Takes out previous month low. Accumulating below March open. Longs accumulated. Range. Dealing range created. Inefficiency. Notice how it's the only one created in this range besides this small volume imbalance. Large inefficiency created. We don't even return to it. We stay above this order block and then taking out the highs. Like I said, small stop run, shallow stop run to start the year. Stop run, displacement, and it's just higher from there. Never looked back. Sell side taken, as I mentioned earlier, here and here. Sell side taken, buy side taken here. Dealing range retracement, sell side liquidity, very tight right here. Displacement higher. No small stop hunt, but no stop hunt to start the month. In terms of sell side liquidity, displacement higher. No displacement away from this imbalance. Price is just really sitting inside of this for a while before the following month taking out the low, revisiting this order block, and then displacing higher. Balanced range, displacement away, imbalance created, trade away, reclaimed. I believe reclaimed, if not just this order block, displacement higher. YM, most of you know I haven't really even been offering analysis on YM for most of this year, because I mean, really look at it, we're 300 points away from the quarterly opening price. It really hasn't done too much as far as high time frame moves. No stop hunt to start the year. Really just sitting in a range. Now displacement lower. Rejects quarterly opening price. Accumulating longs below an old low. Here you go. Eyes are going to be at this high to start, and then we'll see what happens when we come back inside the range. Not a whole lot, and the 4 hours not going to show really a whole lot either. Again, it really is just chop. This is a range. These lows aren't taken here. They're not taken here. This high, this is your first stop run this year, so first stop hunt here. Then we get finally some clear price action. Imbalance created, trades away, expanding the range, retracement, imbalance, quarterly opening price, easy shorts. And this is all really just chop, so I'm not even going to go over this. Gold. As I mentioned last year, gold is going to be one of my favorite positions for the entire year with what is going on geopolitically, the economic settings just favoring gold, regardless if the dollar is dethroned as global reserve currency, and petrodollar stays or goes. It doesn't matter. Regardless, a currency alternative is being built backed by hard assets, gold being predominant leader, China and Russia accumulating large quantities of gold since pre-COVID. Now I will go back and show you that. So why am I not looking for deep runs lower on gold prior to taking out all-time highs? We do have these equal highs up here because of this set of lows right here. Longs were accumulated below these lows, so price has no need to offer this price again. I'm not going to be looking for any real dig lower till those longs get offset up here. Up there. And then we can look at this large imbalance that's being left open and relative equal lows, possibly. I wouldn't favor this. I'd favor this here. This large imbalance being left open tells me that it's going to be used for a larger fractal. But let's get into it. No accumulation below quarterly open price. Price drives higher. New month takes out existing quarterly high, previous month high, displaces lower, fair value gap. Accumulation inside the fair value gap drives lower, accumulates below quarterly opening price. Here, same thing. Here's your stop punt. Here's your monthly Judas swing here. You go up, creating a short-term high. Lower, accumulating below monthly and quarterly opening price. Displacement higher. Range bound. Four-hour. For created displacement, trade away, reclaimed it. Gold never looks back. Leaves this wide open. Accumulation. Itty bitty stop hunt right here. Swing low taken. I don't know if this candle went up or down first. If it went up, you could have traded back down into this because you took out this high, then you traded back into this fair value gap or / propulsion block, and then higher. Kind of a mess. Not a lot here. Monthly candle here distributes towards the end, towards the close. Low. Judas swing into the next month. Takes out previous month high. Displacement met with displacement. Lower. This is balanced. So when you see something like this, monthly opening price, displacement, and displacement, price doesn't necessarily need to come back up into this range. And a lot of people will be offside waiting for this or a deeper run here. And I'm guilty of this as well. But when you see something like this, price isn't going to always trade back up into this imbalance because buy side is delivered, then sell side is delivered. So it's not necessarily inefficient. Displacement, fair value gap, 3 drive pattern, fractal model, fair value gap, entry, lower, bang. This would be the trade to take right here, in my opinion. After this, just keeps grinding lower, slow. accumulating below quarterly opening price. Stop hunt to end the month, start the up move. Monthly open, taking out existing month low, below monthly opening price. No entry offered here. On this time frame, this is also extremely sloppy, but sell side taken, buy side taken, dealing range 50, equilibrium, fair value gap, longs. And now price is just accumulating for the next move. That wraps up indexes. Let's move on over to currencies. AU. Small stop hunt to open of the quarter, below swing low. Still accumulating orders in this range. Displacement away from the range here. Fair value gap. Reclaimed displacement. Takes out quarterly high. Takes out previous month high. Displacement lower. Fair value gap. Buy side taken here. Sell side taken here. Dealing range. Fair value gap. Equilibrium. Move lower. If this isn't your trade here, I'd be looking at something like this. So, same thing, buy side in this swing high right here, taken out with this wick. This swing low here, taken out here. Dealing range, equilibrium, tapped to the pip. Breaker block. Trade idea. Distributes old longs below previous month low. Now price is just accumulating. Really nothing notable for AU in all of March, despite the dollar weakness. Stop hunt here. Displacement. Dealing range. Order block. Trades back down into it. Move. Displacement. Fair value gap. Just taps into it. Price is really range bound. Stop hunt. Continue higher. This is something that I would have missed here. This would make me want to see lower prices, this displacement. But not offered. Price grinds higher into monthly close. Distributes monthly candle. Swing low. Swing high. Stop on above previous month high. Displacement lower. Dealing range. Equilibrium. stop hunt, dealing range. To the pip. Distribution lower, and then this is for me, this is accumulation. I haven't been keeping up too much with the Australian dollar, but it's positively correlated with gold, and we have a weak dollar, so this should be accumulating longs in my opinion. EU, stop hunt to open up the quarter and the month. Accumulation below quarterly open price and monthly opening price. Displacement higher. Price leaves a small imbalance here. This is technically balanced. Small imbalance here. Candle body showing up for work. Displacement higher. Monthly open. Stop hunt above existing relative equal highs. Not going to dig too far to the left. Displacement lower. Fair value gap. Just barely trades into it. This would miss me. This is sloppy on this time frame. Getting down into quarterly rejection block. Well, daily rejection block inside of this quarter. Stop hunt existing. Rejection block. Trades into it. Really cruel to people. Expanding range. Highs, lower lows, higher highs, lower lows, and then the move. This would have been the cleanest trade here. Daily fair value gap. Daily order block. Trades. Look to offset here and here. Four-hour. Again, this is sloppy. Dollar was in a very, very unappealing range. This is when trading got nice. Clear accumulation, even though it's not stagnant and sideways as nice as dollar was, right? This is a clear accumulation of orders, very tight range in comparison to, other price moves. Look at the size of the candle bodies; they've shrunk. You have these outlier days. Wednesday the 18th. This is probably CPI or something like that. We don't get a lot of large ranges that are consistently printed. Swing low, takes out range high, displacement lower. Small fair value gap with relative equal highs. Taken, trade lower. Quarterly low, or monthly low, apologies. Cruel range, expanding, seek and destroy on a daily and 4-hour time frame. Higher high, lower low, higher high, lower low. Here's that range, that trade I was talking about. This is balanced, especially not leaving imbalances behind here. Balanced range, displacement, trades back to it, longs. GU opens the month, stop hunt. Grinds higher, small fair value gap, trades back into it, just grinding higher. Consolidation of highs, SMT with the other two indexes, I believe. because we marginally took out this high, small SMT, displacement lower, fair value gap just touches into it there. But if that's not to your liking, same thing. Swing high, swing low, takes out buy side, takes out sell side, fair value gap, dealing range, equilibrium, breaker block, all the pieces there. Stays, accumulates inside of this fair value gap for a while. This place is lower, takes out sell side. Nice order block created. This place is higher, trades back down into it using monthly opening price, order block, volume balance, fair value gap. All the pieces here for longs, same thing, displacement, order block, volume imbalance, wicks, money. Very clean delivery. UCAD, really not even going to go into too in depth with the 4 hour. Probably not going to do the 4 hour. Look at the relative open and close of the quarterly candle, quarterly open. Here, quarterly close is $30 pips away. Incredibly small range for UCAD. But take out forms of buy side, run lower into equal lows, accumulate, displacement, small imbalance, leaving this range, price runs higher, displacement distributes above old highs, really this set, and you do have 1, 2 failure swings from previous range, and price distributes lower. Not really going to go into the 4 hour. There is not a whole lot to gather from this. Again, I do this for all higher time frame closes, weekly, monthly, quarterly, yearly, just depending on which high time frame close I'm studying will determine, the time frames I'm analyzing, right? For monthly review, I use the 4 hour, weekly review, the 1 hour. If you do daily reviews, 5 and 15 minute. Rule of thumb really for me is I want to be able to see it all on, one screen. Clearly, not all bunched up like this. So, study the delivery. Make yourself familiar with how candles print, what they look like inside of them, and this concept is transferable to all time frames. So you can do this on a 4 hour candle intraday, a 1 hour candle intraday. You can go as small as you want because all candles print with this idea. Depending where we're at in order flow will dictate movement below opening price and obviously expansion. I hope this was helpful. Till next time, talk soon.